Good afternoon and welcome to your market update, brought to you by CBN Financial. I'm your AI host, bringing you the key market developments you need to know to make informed investment decisions. U.S. and global markets started February with notable volatility and mixed signals. After a pullback late last week, U.S. stock indexes rebounded today with the S&P 500 pushing into record territory, and the Russell 2000 small-cap index outperforming peers, supported by robust gains in chip makers, AI-linked names, and positive manufacturing data that signaled an expansion in U.S. factory activity for the first time in a year. Tech heavyweights like Alphabet and Amazon moved higher ahead of key earnings releases, though Walt Disney underperformed due to concerns in its theme park and media segments. Market volatility eased slightly with the VIX declining toward 16, suggesting reduced near-term stress. Despite equity strength, markets were shaken by a sharp sell-off in commodities, as gold and silver prices plunged following investor reaction to the nomination of Kevin Warsh as the next Federal Reserve Chair, a move perceived as hawkish on inflation and monetary policy, triggering broad commodity weakness, including oil and metals. This reaction extended to global equities, with Asian markets notably weaker, even as European indexes found footing. Bitcoin also softened, trading below recent highs, reflecting broader risk-off sentiment across digital assets. In corporate news, Oracle's stock ticked up after the company announced plans to raise up to $50 billion to invest in its cloud and AI infrastructure, a strategic pivot that analysts are watching closely as tech demand continues to evolve. Additionally, major earnings from companies like Palantir, Amazon, Alphabet, and others are expected this week, setting the stage for a potentially volatile trading environment as investors weigh earnings results alongside Fed policy and economic data. In fixed income and currency markets, the U.S. dollar strengthened on expectations of tighter monetary policy under a Warsh-led Fed, pressuring precious metals and influencing yield movements. Oil prices retreated amid cues of easing geopolitical tensions in the Middle East, adding another dynamic for energy sector investors to monitor. Overall, today's markets reflect a mixed but dynamic environment, equities showing resilience in the face of macroeconomic headwinds, commodities correcting sharply, and crypto markets flirting with downside pressure. As always, investors should balance near-term volatility with long-term strategy, monitoring earnings catalysts, Fed signals, and global economic developments that could shape risk appetite in the coming days. Good afternoon and welcome to your market update, brought to you by